with John Mongelli, who is a hard money lender. Going to talk to us today about the process, some of the qualifications, and really just kind of like a discovery of it all. Because I feel like a lot of people are pretty intimidated by hard money. And I thought this would be a great topic to get people familiar with it and the benefits of using it, throughout a real estate transaction to kind of, bring some of these situations together where otherwise they may have fallen short or the deal never would have worked.
Right.
So I know I can talk from experience because I had met you years ago at a networking event,
Right.
and I ran into a situation. It was a HUD home. And if anybody knows anything about HUD homes, HUD's a government agency.
Yep.
They're not the easiest people to deal with. And, the person had a fair amount of money to put towards it, but they didn't have the whole amount. And they had a house they were going to sell in the future. And they needed a hard money loan to make this all come together. And we reached out. To me, it was a really straightforward, easy process.
It's very straightforward.
It happened quickly. The customer was happy. Everything came together just so it wouldn't. And without that deal would have never happened. It would have never happened. So, anyways, I'm going to shut my mouth a little bit. You tell me about your business, and let's start the conversation.
So I do local hard money in Rhode Island, and I'm based in Rhode Island, and that's the difference. How I'm set up is you call me. Generally, it's my cell phone. You reach me 24 hours a day. I answer the phone. I don't, screen my calls. Luckily, when we're talking about, if we're calling about a specific property, I'll look it up on the computer while I'm talking to you, and we'll go through an evaluation process that probably takes 5 or 7 minutes. It's very easy. It's not complicated. I'll ask you some basic questions, probably how much you're paying for the property, what type of property it is, and where is it located. And then I'll ask you how much you're planning on putting down. And as you're telling me that, I'm looking it up on the computer, just as, whatever sources I can, Motivo or Realtor.com, and just see what the general baseline of value might be. Even the tax assessor's office I'll be looking at while I'm talking to you on the phone. Most properties I'll go and look at. Generally, when you call, we'll go through that evaluation process. It's under 10 minutes, very, very simple. There's no written application. My goal is, after talking to you, is to be out the door and on the site in less than an hour. So I don't know that many bankers that do that.
That's quick.
I don't know any bankers that will do that on a Saturday or a Sunday, and after meeting you at the site, within a 10-minute site inspection, I give you a verbal commitment and follow up with a written commitment within an hour or so. So it's pretty fast. There's no formal written application process. I generally don't pull credit reports. I haven't looked at an income tax return. I can't think of the last time I looked at an income tax return. So it's been a long time. I basically lend based on the value of the property. There has to be sufficient equity in the property that if something goes wrong with the property, nobody takes a bath, as far as a loss. The other thing about hard money that's kind of unique is you don't really even need to put down money to buy a house. You can get a cosigner to sign that might have maybe your mom or dad or girlfriend or brother or sister, and they may have a piece of property that has sufficient equity in it that they can co-sign the loan and post the property post their property as additional collateral, and that speeds things along. I do a lot of those loans. You'd be surprised how many people wind up posting a piece of property that they're not even buying it. It's a way of helping a sibling out sometimes.
Wait a minute. So I'm not aware of this. So I want to understand this a little bit more. So let's just say, for example, mom has a house.
Yep.
She's had the house for 25 years.
No mortgage.
No mortgage, so there's a ton of equity in the house. And mom's son
Hang on, I'll stop you right there.
All right.
And you're buying another property, you're approved. That's it. Things you can do that, hard money, again, we were going through the process. So you call me, I look at the property, we discuss the terms, put a value on the property, what we might lend on it, And then if you need a written commitment with proof of funds, we'll do that. We'll actually provide a bank statement and a proof of funds letter. And then after that, it's like 10 business days to close. I've done, you know, a handful of 24-hour closings. They're not that typical. But if someone has a title already done and they have a title policy ready, yeah, we can do a 24-hour loan too. So
That's quick.
those happen, you know, not that often, but they happen.
Yeah, yeah. So what are some of your terms for somebody who's looking to utilize your services?
So the interest rate is higher. I mean, my terms are 12% and 2 points. And they're interest-only payments. And we do almost all the loans at 12 years, interest-only payments. And that's very rare for a hard money lender in Rhode Island. That's not typical. Most hard money lenders will lend for 6 months. And then after the 6 months runs out and you haven't sold the property, they'll ask you for another couple of points to extend it for 2 or 3 months. And then if you get caught where you can't sell the house or there's an issue, they'll ask you for a few more points the second time. And I've seen that happen a bunch of times where it's kind of been re-upped a few times. And, you know, you get to paying around 7% in points, it starts to get unpleasant.
Yeah, yeah. I'm sure it's chewing away any sort of profit that they're trying. Yeah.
Equity, yeah.
So, what's your demographic typically? Is it people that are looking to do house flips? Is it people who are just trying to, like my situation, that we help that person try to just close the gap on the financing, or is there a typical person that you're working with?
I service a lot of the Spanish community. Typically it's a mom and pop type thing, you know, somebody fixing up a house and trying to move on, maybe working on one property and trying to buy a second property at the same time, you know, for the second flip. It varies. I deal with a lot of contractors, developers.
Mm-hmm.
I've got a subdivision going up in Connecticut that I deal with a contractor up there, and we're financing that whole subdivision. So I was actually 2 subdivisions. There were 12 units, but very, very easy terms. You know, he calls me up, and I don't even go look at it. You know, I know enough. You know, he'll do a drive-by with FaceTime or something, and or message me. You know, photos of the site, and we just re-up another loan for the next building going up. So yeah, hard money is the way to go if you want to go fast. The other thing about hard money is with a bank, if you go to a typical bank and say, hey, look, I got this house, I want to rehab it. The windows are all smashed out, it's boarded up, and the plumbing's missing, and the heating system's gone. That's going to be tough to get through a typical bank. Especially if you don't have a lot of experience, and their lending requirements are, you know, they don't particularly like those piece of properties. So I do.
Yeah, no, that's true. And you know, if you're utilizing, you know, some of the more conventional like fix and flip products, you know, which we have some of those, you know, I utilize some of those, but you know, they're done in stages. They're highly, you know, monitored. You know, everything is very, you know, what's the word I'm looking for? Kind of want to hold your hand through the whole process, you know. And of course, you know, there's fees at every point, you know. So by the time you're done, you know, we're dealing with, you know, the headache of it, dealing with the cost of having, because of course the person who's getting a loan has to pay for the inspections, you know, has to pay for the draws, you know. So by the time it's done, you know, you have all this hassle to deal with, and it's probably no cheaper than.
And you're paying for inspections, you're paying for appraisals for those type of loans.
Right. Yeah. Yep.
Maybe they may require a home inspection. I don't require an appraisal to take care of that myself. We don't require a home inspection. Although, when I look at the property, I will do a mini home inspection, basically to protect my interests, but to make sure there's no oil tanks on the property, friable asbestos that you don't know about. And I'll point all the stuff out to a potential buyer as I'm walking through a property, and I've actually educated people. You know, they say, "Oh, whoa, we didn't know we had an oil tank, and we didn't know it." So that, you know, there are issues that come up that you know. I've owned enough of property, and I've seen enough property that I started out hands-on rehabbing these houses. Probably did about 287 of them individually, hands-on.
Wow.
And I still drive a pickup with hammer and stuff, you know. But you know, I just don't let it go yet, you know.
Yeah, yeah.
But
is that how you started in this whole
yeah,
thing?
it's the old adage, you know, you buy one.
Yeah.
I bought my first house probably about 40 years ago for $20,000. I was doing a tile job, and the realtor said to me, it was Lenny DePreet, who's passed away. He was a realtor. He says, "You want to buy a house?" I says, "Yeah, Lenny." I says, "What do you got?" He said, "I got a 2-family in Silver Lake. It's an estate. The person passed away." I put the bucket on top of the cement. I says, "Let's go." Because I was dying to buy a house. I was like 20. I didn't really have a heck of a lot of money. It was like nobody gave me nothing. I didn't, you know, in life I had to earn every penny or whatever I made or invested. And we looked at that first house. We bought it up, and I was on 87 Alverson Avenue. I bought that first house. I moved in that, fixed it up, and it had an apartment on the top, and I was getting $250 for rent. I said, "Oh, this is fantastic, man. I'm living here. I don't have to pay any mortgage." You know, I said, "This is great." So as soon as I was done with that, which I recommend, the next step after that is get the line of credit on your house. You know, and so you can pull some of the equity out of the property. Maybe use it as a down payment for fixing your to put down on a house, or materials for fixing a second house. But anyway, bought that first house. The market took off like crazy, and I bought a second house on Ophelia Street. It was built on a dump, and it had settled 3 feet. And the realtor was Sal Moyo. He was the head of the Realtors Association years ago. He was so tired of showing the house. He left the door open and he sat in his car. He says, "You're not coming in, Sal?" He says, "No, go in." He was just totally fed up with the property.
Yeah.
And I came out and I jumped and I said, "Sal, I'll buy it." He said, "What do you mean?" I said, "I'll buy it." And it was, I think I bought it for like $12,000. It was a ranch. And yeah, I jacked it up, put in I put in a cement wedge, and I was off and running after that.
Wow.
And I'll tell you how he sold that property. It's just one short story. The market was really, really hot. And I knew it. And I didn't have a lot of experience, but I realized the market was very hot. A lot of Boston people were coming down to buy Rhode Island properties. So I put an ad in for an open house on Sunday, and it was like 9 o'clock. And I showed up like 2 or 9, walked it. There's a whole bunch of people standing in front. It was like maybe 7, 8 people waiting to get in. They were like pushing themselves and jockeying for position. So I walk up to the top stair, you know, greeted everybody, and I says, "Did anybody bring a check?" And everybody's looking around. I said, "Why is he asking us for a check?" And 3 people came up. I said, "Okay, you can move to the front of the line, and the rest of them, I'll show you the house in a few minutes." They went bananas. They went absolutely nuts. "You can't do that."
That's pretty funny.
So I brought the 3 people in, and now they're like fighting, like who's gonna make the first offer.
You created that emotional reaction with people.
Yeah, absolutely. And they were fighting with each other inside, and I got the check, and I closed them before the sales agreement before I even walked out the door. The rest of them, and I had to face them on the way out.
You might have made a couple enemies that day.
But it was fun. I like having fun sometimes doing that stuff.
That's good.
Yeah.
That's a nice story. I like that. I'm glad
Yeah.
you shared that.
Yeah.
So tell me, like, what are some of the struggles you have in your business today?
I have to monitor the taxes and sewer and the water. You know, if I don't monitor the taxes, sewer and the water, some people just let them go sometimes. And so, you know, that's an effort. Yeah, check them quarterly. You know, that's just to make sure the properties don't go for sale. And believe me, they go for auction even after.
Oh, like a tax sale or something like that?
Yeah, like a tax sale or a water sale or something like that. Yeah. But other than that, I got a lot of repeat customers.
Mm-hmm. Well, that says a lot.
Yeah,
That always says a lot.
I'll give you an example. I just did a loan a lady wanted to buy a house in the southern part in Westerly, and I had did a loan on her house about a year or two ago, completely renovated it. She got a temporary mortgage with me, paid it off, renovated the house, and she just called me about like a week, 2 weeks ago, and she said, I got another house. It's in Pawcatuck. It was in over the line in Connecticut. So I knew the house that she had rehabbed with my loan, and I looked up while she was on the phone. I looked up the property, and I told her, I says, "Look, you're approved, man. I don't even need to see the property. I didn't even look at the property, because I knew that her work product on the first one was so tight."
Yeah.
And they made all the right steps, and they had enough equity in the first property. So she did that blanket mortgage. She posted her property with the property she's bought, and she actually pulled out $100,000 of closing too to fix the property. This typically doesn't work that way, but
Yeah.
she had enough equity in her home that it was a $300,000 loan. I didn't even look at the property.
Wow.
Yeah, it doesn't happen that often. But it does happen. And
That's
she was
something.
happy,
Yeah.
She was shopping around. She couldn't get a loan and this and that, because it was in a trust, and actually the house was owned by two trusts. It was just so much. She called me up. I said, "Yeah, no problem," and we did it.
So, if you have an example, I'd love to hear it. But if you don't, that's okay. Do you have any like horror stories from this? I feel like there's so much risk on your your behalf with some of these people. Not going through some of these formal application type steps. Have you ever had any like?
Well, I got to tell you, I've been around a lot of people and done a lot of deals. So, first of all, I have a very good background in the mechanics of a building. I fixed up 287 houses.
Yeah, you learn a couple things.
And I had about seven. Was a wholesale land dealer out of state, so I had over 1,700 pieces of land, plus the my loan portfolio. So the mortgage process is pretty simple, but I have a sort of a radar. When I talk to people, it's face to face, and I can tell if I don't want to do the loan or not, because
Got it.
if you're asking questions and they're not answering them, or you stay away from that stuff.
Yeah. Yeah.
So I mean, that horror stories. I haven't had a foreclosure, and I'd have to look it up when I had the last foreclosure. It might have been 5 years ago, but no.
Sounds like your intuition does you well.
Yeah,
then.
the intuition. Yeah, it's radar. It's radar, and and the people are with me when I deal with them too, so they know where I'm coming from. And a lot of this is based on trust, man. If I give somebody a commitment that they'll dealt with in the past, they know it's going to go. It's going to go through, and that's reassuring on the other end of it. But I don't think the worst thing happened. Yep, I'll give you a horror story.
Okay.
One horror story.
All right.
It's a $40,000 horror story. I did a loan on a piece of leased land, I think it was in Coventry, almost on a lake. It's $40,000 leased land.
Like a manufactured home kind of a thing?
No, it was a old cottage.
Got it. Okay.
So the land didn't go with it. You rented the land.
Yes.
And the cottage has been on it for like 70 years and went from family to family, and finally this contractor got it. So this, of course, you have to have insurance on a piece of property, and he let the insurance slip. So, I caught it, and I sent the check in. I called him up a couple times and says, "Look, you got to pay the insurance. It hasn't been paid." He wasn't keeping in touch with me or anything, so I cut a check in full for the insurance and sent it in. The house burnt down, and they got the check the day after it burnt down. So you had a burnt down house on leased land equals nothing.
Yeah. What do you have?
No
You
insurance.
have nothing.
So I mean, that was a little bit of a lesson. And I almost told myself I'd never do a loan on leased land again. However, 2 weeks ago I just did a house on leased land that was a $90,000 mortgage. And by the way, this guy didn't put any money down. He didn't have money to put down. He was an excavator, but he had a lot that was up in Coventry that was fully engineered and approved, and had all the building stamps. And he had another piece of property in Connecticut that was fully engineered. So again, he posted additional collateral to buy that house, and that got me back into the leased land, doing a piece of leased land, you know.
Got it.
And that guy I didn't even meet. We just did that. He sent me the plans, and I just did all my analysis, you know, from home and stuff.
Yeah.
So it's not complicated. This is very simple stuff, man. You know, to get a bank loan and not fill out an application, that shows how simple it is.
Yeah.
You know.
Yeah.
Now the closing package, on the other hand, is 56 pages, but that's the paperwork of you know, that includes a note, a mortgage, personal guarantee, title insurance policy, yada yada yada.
Yeah.
But,
Yep. Yep.
yep. And the attorney I use one attorney in Rhode Island. He's you know, he's right in the sweet spot. He's not super high. He's not super low. Good reputation.
Is that the guy on Reservoir Ave? You still using the same
Yeah.
guy?
Yep. Yep. Oh no. I've got another attorney up in. I don't want to say his name on this, but yeah.
Cool. Great.
Yeah.
Awesome. Any closing notes before we wrap it up?
No, unless you got any other questions or anything.
No, I think I asked everything I got.
Yeah.
So.
Yeah.
Awesome. All right. Well, thank you so much for
Yeah.
coming on. I really
That's great.
appreciate
Yeah.
it. I look forward to sharing this.